All right, we're about to get started in 2 minutes here, guys. Welcome, everybody. Hope everyone's doing well. Let's give a couple more minutes for some more people to join before we get started. And we'll wait 1-2 more minutes, and we're going to get started, all right? I'm going to blast it out. Let everyone know. Let your brother, let your sister, let your dad, let your mom, your uncle, your cousin, your nephew, your stepbrother, your stepsister, your stepdad, your stepmom, your dog, your cat, your goldfish. Let them all know. Let them all know we're about to get this session started, all right? Let your kid know. Let your baby mama know. Let your shorty know. Your girlfriend, your boyfriend, your husband, your wife, whoever it is, let them know we're about to get started in 2 minutes. Make sure everybody's on this call because today, we're taking it to another level. Today, we're switching the gears up today, all right? So let everybody know. Let everybody know we're about to get started in 1 minute, all right? Literally 1-2 minutes here. All right, just got some shorts from Psychological Level. Oh, I see you. Okay. 2 minutes, we're starting today's call. Some of you guys might remember this song. All right. So, hope everyone's doing well today. Welcome back, everyone. Like I said, I hope you're doing well. I'm excited to see so many of you guys back for day number 2. That's the first step of success, is showing up, right? If you notice, not as many people are on today as yesterday. Why? Because not many people are going to be consistent. Not as many people are going to be consistent and keep continuing on for a process that's going to give them consistency. So before we get started, I want to do a quick little check-in with you guys. Jump in the chat real quick. Who was here yesterday? Just type me in the chat if you were here for day number 1. And if today is your first session, if you were not here today or yesterday, sorry, that's completely fine too. You're in the right place. You're still going to get tons of value from today's training. So type in the chat real quick, me, just the word me, if you were here yesterday on yesterday's call. I'm excited to see a lot of people back. We got a good amount of people on. But I noticed one thing. We don't have as many people as we had on yesterday at the starting time. Maybe more people jump on later, but that shows me one thing. That shows me that you people that are on here right now are more committed than the people who were here yesterday. Because you shown up for part 2, that means most likely you're going to be here for part 3. That means more than likely you're the type of person who's willing to go through a process to learn more. All right? So if you're here yesterday, type a me in the chat so we can see how many people are here on yesterday's call on day number 1. Like I said, if you weren't here yesterday, that's fine. You're going to get tons of value today. We got a lot to go over. We're switching up the gears today. Yesterday was not about entries. It wasn't about indicators. It wasn't about buying, selling, how to trade, how to make money. Yesterday was just a day about understanding why most traders lose. We talked about mindset. We talked about psychology. We talked about a lot of the mistakes that almost every single trader makes and why changing strategies over and over again never fixes the real problem. So like I said, today we are shifting the gears. We're going to turn things up a bit, switch things up a bit today. Now you guys are going to learn today what consistent traders actually do. I'm going to help you guys read the charts. Today is the technical day. We're going to get into the charts. I'll show you guys how to read market structure, how to identify important levels, how to filter out low quality trades, and just how I build a trade idea before I even think about pushing buy or pushing sell. Okay? So by the end of today's session, you'll understand, I would say most of the framework that I use to analyze the market. But who can agree? Type in the chat one more time if you guys can agree on a lot of the things that we talked about. I see a lot of me's in the chat, so it looks like there was a lot of people on yesterday's call. That's good to see that you guys showed up and you're being more consistent. Like I said, most of success is just showing up consistently. So I want you guys to let me know if you can agree on a lot of the things we talked about yesterday. What was one of the biggest things you guys took away from yesterday's session? Type in the chat real quick. 2 minutes here. What's one of the biggest things you guys took away from yesterday's session? All right. And if we can all agree on some of the things we said yesterday, right? About why most traders lose or why most traders aren't consistent. Or again, why jumping from strategy to strategy is not the best thing to do. All right, I want to see what you guys say. I want to see what you guys say. Real quick in the chat, if you guys took notes. Someone said addicted to action. There we go. Addicted to action. All right, addicted to action. We got one. No trade equals a trade. There we go. Okay, we got two. No position is still a position. All right, all right. What version of myself I will feed? There we go. We were talking about habits yesterday. You know, you're going to have good habits and bad habits in life. Which habits are you going to feed the most? There we go. Psychological foundation, strategy hopping, consistency, showing up on the chart, same time every day. Market rewards discipline, not perfection. Okay, okay, okay. Addicted to the charts. I see a few of you guys say addicted to the charts. I've seen another person said addicted to the charts. So yeah, I actually said it just how someone said it. Most people are addicted to action. I see, okay. Feed the side that you choose. There we go. Feed the side that you choose. Accountability is key. Accountability is key. Patient follow rules. Showing up first. There we go. There we go. Awesome. Now, real quick, I'm going to get out of the chat for a little bit. I love engaging in the chat with you guys. Where is everybody tuning in from? It's great to see. Right now, it's 2 o'clock in the afternoon where I'm from. I know some of you guys are probably in Europe. Some of you guys might be in Asia, Africa, United States. I bet some of you guys are here local in the GTA, General Toronto area. I'm here in Toronto right now. Where are you guys tuning in from today? We're going to get into the charts now. Like I said, today is the technical day. Before we dive in, do yourself a favor. Grab a notebook. Open up your notebook, your phone, your laptop, wherever you're going to take notes. Because today's session is packed with technical concepts. And I don't want you trying to remember everything from memory. Write things down. Take screenshots if you need to. Review your notes afterwards. The traders who improve the fastest at the end of the day aren't always the smartest. They're the ones who actually study what they learn. I wasn't the smartest person in school. Honestly, it's just because I didn't apply myself. But I was the type of person that if the teacher told me, hey, you need to do this, hey, you need to study this, or you're going to fail, I would get my work together. So I just want to see where everybody's tuning in from tonight. We got Montreal, Los Angeles. Oh, what's up? What's good, Montreal? Not too far from here. Alberta. Did I see Brampton in the chat? Brampton. I see Brampton in there. Germany, Switzerland, UK, Toronto. We got Toronto in the house. What's good, Toronto? That's where I'm tuning in from right now. London, Alberta, Belgium, UK. Lots of people from the UK. I see the UK in the chat. What's good? What's good? What's good? Awesome. Awesome. So, guys, we've got a lot to cover today. So, let's just jump straight into the charts because I know you guys came here for a reason to learn. And I don't want to waste your time today. I want to get into the technical side of things. So, all right, right now, we're getting into the technical side. This is where most people expect me to be throwing a bunch of indicators on the stream. I think most people at this point expect a lot. We're not going to go over a lot. We're going to go over some simple things. I like to keep trading simple. The cleaner your chart is, the cleaner that your decisions become at the end of the day. So today I'm going to be showing you some of the concepts of exactly how I like to read gold before I ever even think about taking a trade. So step number one that we're going to be focusing on today is market structure, okay? We're going to be talking about market structure. Now, the very first thing I like to look at isn't an entry. It's not necessarily a candlestick pattern. It's not an indicator. The first thing I like to ask myself, okay, is, and I'm going to write this out for you guys, all right? So, the first thing, this font, there we go. Let's change the font here. So the first thing I like to ask myself is, what is price actually doing? Because at the end of the day, price tells a story. If you learn to read that story, you stop guessing. If you're guessing, you're going to be an emotional trader. So forget about everything else that you guys know for a second. Don't even look at candlestick patterns. Just look at swings and ask yourself simple questions. The simple questions are these. And it's going to be all about market structure. So the first thing I ask myself is what price is actually doing. Okay? Is price making higher highs and higher lows? Or is price making lower highs, lower lows? That's market structure. Okay? So if we might use the word if a lot on this session, okay? Okay? If price keeps making higher high, higher low, higher high, higher low, higher high, higher low, that is an uptrend. Very simple. All right? This is a lot of the context that you want to understand about trading. What does this mean right here? This means the buyers are in control. Every pullback is getting bought. The market keeps accepting higher prices at the end of the day. If we can understand this, we know where the context of the market is. Now, if we flip it, if price makes lower low, lower high, lower low, lower high, that's a downtrend. So if we're going to flip this for a quick minute, give me a minute, let me write this out. Bear with me, because yesterday we were freestyling it. Today we're getting educational mode. So it might take me a couple minutes sometimes to write some of this stuff out. So bear with me as I write some of this stuff out. So if we flip that, if price makes lower low, let me space this out for you guys. There you go. There. So if price makes lower low, lower high, lower low, lower high, that's a downtrend. Opposite of what I just said. Remember what I said the first time. I want you guys to remember. The first thing I said, buyers are in control, right? This means buyers are in control, right? Buyers are in control. Okay? Simple. We're keeping things simple but effective today. Because the most money I've made, the most money I've helped my students make over the year with my trade signals, my live analysis. I had a student who made $70,000 last month. Crazy. Keeping it simple. Nothing crazy. We didn't go over fair value gaps, ICT, smart money. We went over simple things, okay? So, this means buyers are in control. This means sellers are in control. Now, part of trading is identifying the trend. Okay? It's not always about taking trades. Have you guys ever heard the quote, go with the flow? You know, you want to go with the flow. In trading, you want to identify the flow. So it can take time to actually identify the flow. Remember what I was saying yesterday. Most traders don't have the ability to wait for trades or wait for trends. More importantly, we're not waiting for trades. We're waiting for trends, right? Trends, or let's say market structure, that takes time to form, okay? So what this means, what buyers mean, is that every pullback gets bought. What sellers mean is that every rally up ends up getting sold. The market accepts lower prices. Just as with buyers, the market is accepting higher prices. You might have kind of seen gold doing that today on a 15-30 minute chart. If you're more of an advanced student, you might have been able to notice going into New York session on the 15 minute, maybe the 5 minute, 15 minute, 30 minute today, gold had some of that. So the biggest mistake, I want you guys to understand, the biggest mistake beginners make is trying to buy in a downtrend or sell in an uptrend. Simply because they think price has moved too far. It's moved so low. It's got to be a buy. The market doesn't care whether you think it's expensive or cheap. The trend can continue much longer than most people expect at the end of the day. So your job as a trader, your number one job as a trader is to trade with the trend until the chart gives you a reason not to. Okay? So that is something important to really think about. Now, here's another important thing to think about. A lot of people think one red candle or one green candle changes the trend. It doesn't at the end of the day. One green candle doesn't necessarily create an uptrend, or one red candle doesn't necessarily create a downtrend. Market structure changes when swing changes, not because of one emotional candle or how you're looking at the chart. That's why it's always good to zoom out first. The higher time frame or the market structure will always tell the story. So we're going to go to the charts in a little bit. Everybody got this? So market structure, just kind of understanding market structure, what you're trying to do, what your job as a trader is, right? Your job isn't necessarily open up your laptop, take a trade. Some of you guys might see me do that, but you guys got to understand I have 11 years of experience. There's a complete difference between my experience and maybe a lot of your guys' experience. That's why I do a lot of live trading sessions, to give you guys that experience, because I have over 100,000 hours on these charts. I've dedicated my life to this over the last 11 years. The company I used to work for, I had 65,000 hours streamed. That was just in the company, not including Zoom calls, not including YouTube calls, not including everything else I did on my own time. Just in that company, I had 65,000 hours streamed. So I have over 100,000 hours on these charts. I don't want you guys to always try to copy what I do. I want you guys to start with a framework, right? So you can slowly build yourself to a better experience, right? And get better on the charts, all right? So let's go real quick to the chart here, and we're going to break some really simple things down here when it comes down to market structure. So what is market structure? Like I just said, in an uptrend, that tells us buyers are in control. So if we're going to look at this as a low and we're going to look at this as a high, right? We're not talking about candlestick patterns or anything. We're just talking about simple market structure right here. And we're going to look at this as a higher low. I could label this. That might take me some time, but this will be a low, right? So here we would have a low in the market. This is what, when we're talking about the context of market structure, right? We're talking about a low here, right? We have a higher low, right? Here we have a higher high. And here we have a higher high. Now, what do we see here? Where could the trade have actually been here? Like, where could we have bought? Because obviously this is more of an uptrend structure at this point. So if we're looking at the market like this, right? Where could we have taken a buy, or maybe been preparing ourselves for a buy? And this is where we go into the next step. We talked about market structure. Now we're going to talk about key levels. Now that I know the direction, I want to know where price is likely to react, right? This is one of the biggest edges I've found in gold trading over the years. Gold respects numbers. It also respects simple things like supply and demand and support and resistance. Now, not every number, specific numbers, okay? So, what are we going to draw here on the chart? We're going to put a level here. We're going to put a horizontal line at 4,050 here on gold, okay? That's actually a psychological level. So this would be a very round number for gold, a whole number that we focus on. This is a specific number when it comes down to our strategy that we focus on, when it comes down to whole numbers. Gold respects things with zeros, 25s, 50s, and 75s. I'm going to show you actually a few examples from the market today. If you actually look in the chat, I actually noticed in the chat, one of my students said they caught one of the sells at a psychological number. Oh yeah, the camera's acting up. It always does that. Why is it doing that again? Yeah, I'm gonna put a different camera on. Oh, bro, that's so weird. Give me a minute. For some reason, my camera does not want to work at this time of the day. It does not want to work in the afternoon. It wants to work any other time but today. So I gotta put this camera on, the ugly camera. Yeah, there we go. So I don't know. For some reason, this camera does not want to work at this time of the day. It's really weird. I don't get it. This time of the day, this camera doesn't want to work. Freaking $1,200 camera doesn't even want to work at this time of the day. Only this time of the day it doesn't want to work. So I just had to switch my camera real quick. Sorry. My bad. Let's see. Let me get this one fixed too. Yeah, that is so weird. That's so weird. Yeah, for some reason, $1,200 camera does not want to work at this time of the day. Same thing happened to me yesterday. And it made my whole laptop crash down. But yeah, let's get back into this. Sorry, I just need to fix the camera real quick. And there we go. We're back. You guys can see me. I'm moving now. I actually noticed one of the students in the chat said they caught a trade not that long ago off of a psychological level. So, real quick. Here we have some market structure. And we actually have one of the things I love to use. I focus on levels that matter, and I focus on areas that matter in the market. So here we have a key resistance level, right? One of the biggest key levels I use is whole numbers, all right? These areas attract attention because thousands and thousands of traders around the world are watching them. We call them psychological levels. Institutions, algorithms, traders like me and you, just regular traders, are watching them too. That's why you're often going to see reactions at these psychological levels. I especially pay attention to $25 levels. These become natural areas where price often pauses, price often reacts. Does it happen every single time? No. Nothing works 100% of the time like we talked about yesterday, but over 100,000 hours of watching gold, I've seen these levels respected again and again and again, over and over and over again. So let's combine some things right here. Let's put some things together right here. Combine two things together. Market structure, whole level, key level. We don't have to imagine. We can see on the chart gold is making higher highs, higher lows. So the trend is bullish here. Price is pulling back into a key level. We're getting into a whole number around that area. We also have a previous resistance here at the higher high. This is where my attention increases. I'm asking myself a question now. Will buyers defend this area? Or will the structure break? I'm not necessarily entering yet. I'm asking myself, Are buyers going to defend this area? I'm essentially observing, if I could use the word observing. I'm not predicting. I'm not guessing, right? I'm observing where the market is at because I have some context to use now. I'm asking again, will buyers defend this area? Okay? As you can see, this is an area that the market defended, right? We ended up pushing up and we ended up creating a new push to the upside. So this entire area would have been a good area to trade. Now, where could I have entered and say, okay, buyers are jumping into the market, the entry, right? We went over some of the first framework here, and we have something that's called a break and retest happening, right? A break and retest is a simple, repeatable pattern that happens over and over again. And it gives you a clear process on where to enter and even where to put your stop loss. All right. Most beginner traders will see a breakout of a resistance and start to enter. I'll always wait for the retest of a resistance area. I'm going to show you right now, actually real quick, what I'm talking about. So what we're going to do, we're going to go here to community. And we're going to talk about one of my favorite setups, which I'm kind of explaining right now here. This is my trading setup, one of my favorite trading setups on gold. You can see it on the 15-minute time frame, the 30-minute time frame, the 1 hour time frame. So what we're essentially looking for is either a bullish or bearish breakout in a resistance area or a clear market structure, right? That could be something like this, where we have a previous uptrend, a resistance zone has been created, we have broken out of that resistance, we're looking for the retest of that resistance, okay? So this is some of the framework, this is some of what it looks like here. You can screenshot this real quick. I'm gonna give you 20 seconds. Screenshot this real quick so you can save this, so you can remember this, so you can take notes and you can study this on your chart. Screenshot this picture right now. Take a picture of it. I'll leave it up for a little bit. I'm not going to go through everything here. You guys can do that. I'm going to go over that on the charts here. All right. So screenshot this. Take a picture. All right. Give you guys a few seconds to do that. All right. Go. Take a picture. Boom, boom, boom. You know, screenshot. All right. I think you guys should be good. Give you guys a little bit of time there. All right. So screenshot that one more time, and that's basically the setup and some of the essence that we're looking at right here on this chart. All right, we have a market structure, we have a breakout of a structure point at the previous higher high. I keep looking at this camera. No, I keep looking at this camera now. The previous higher high here, we broke out of that. Most traders make the mistake of chasing this candlestick right here, okay? So most traders, they make the mistake of chasing this candlestick here, okay? All right? We get the pullback, we get the retest, and we're entering. Where can we have our entry confirmation? Honestly, it could be on this green candlestick right here. We have a bullish rejection candlestick. So right here, we get a bullish rejection. So this is where we talk about rejection candlesticks. Rejection candle right here. Here we have a bullish rejection candlestick. That's where we could have actually been entering this trade, is on that green candle or after that green candle. We could have been targeting the high, right? Stop loss could have been near the recent low. What's the recent low on this chart? It's actually right here. There could have been two stop losses, either right here at the low, or we're putting our stop loss all the way down here, which is too big. I would rather put my stop loss at that low where I can see the last support was right here. That's where the last support was before we broke out and made a higher high. So this could have been our trade right here, right? I actually took this trade live on a live stream. So I'm breaking down actually a trade right now that I took on a live stream and I sent as a signal back in this month, back in the month of July. This is actually a trade I broke down live on a live stream. You can go on YouTube, go back to July 1st on YouTube and look for this session. You can actually find it on YouTube. I broke this trade down live. So this is something I broke down live. I'm not just actually going over something that, oh yeah, you could do this, this, and this, and that. I'm actually breaking down something I broke down live with a lot of you guys on a stream. So I'm not just going over something in hindsight right now. I'm going over something I went over in real time. And I'm going to do that again. We're going to switch this up and we're going to go over a sell example. This would be one of the easiest trades to look for on gold. If you actually notice, a similar one happened right here where I'm marking right now in this area here, right? Around the same psychological level, around the same exact hold number. So let's keep going replay mode. If you actually notice, you could have had one more setup even right here on gold, right? We have the higher high. Notice we're getting the breakout. Most traders chase the green candles. I said something yesterday a little bit, right? One thing you need to understand is what are you not going to do anymore, right? One thing I was talking about yesterday is I do not chase breakouts or green candles. If I miss the move, I missed it. Gold prints new setups every day, every session, every week. The chase is where your edge is going to die. So we talked about some things yesterday and a little bit. I think I went over this maybe just for a brief moment yesterday about what not to do anymore. Everybody's looking for what to do, what's the best strategy, what's the best indicator, what's the best entry to method. Sometimes you need to have some things that you do not do in place. So one of those things for me is I don't chase breakouts. I don't chase green candles. I wait because a green candle like that simply tells me I missed the move. If I'm not in this move, if I'm not in this move, if I'm not in this move, I simply missed the move at the end of the day. If I missed it, I missed it. That's it. I'm not in the trade. Why am I going to chase it? The move already happened, right? Another thing we said is I do not trade out of boredom, right? Some of you guys took notes. I saw at the beginning of the session, I asked, what's one of the biggest takeaways you got from yesterday's session? Some of you guys said, addicted to action, addicted to being in more trades, right? That's what trading out of boredom is, all right? Number 3 is I do not take a trade without my setup. No break and retest, no rejection at a key level, no market structure, then there's no trade. You're not trading based off of a feeling. You're not trading based off of something you saw on social media. You're not trading based off of someone else's call. Even if it's me, at the end of the day, I want to create self-independent traders here that don't have to rely on me 100% of the time. That's what these sessions are for, okay? So there's do's, there's things we want to do, but there's things we do not want to do as well. Like we said, what habits are you feeding? What person are you feeding more at the end of the day? So I don't chase green candles like this. Simply, that means I missed the move at the end of the day. If you look here, we have a psychological number again, $4,100 right here, right? Here we have another whole number with gold, which is going to be $4,100. Understand, if this is new to you guys, all it's going to take is a few weeks of sessions like this, more sessions with me, over and over again, repetitive, and you're going to understand this thing like bread and butter, like a hobo on a ham sandwich, like peanut butter and jelly. Honestly, this stuff is actually super, super simple. If it's brand new to you guys, if this is your first time learning this stuff, understand this is actually very simple things. I have a lot of students who are on this call right now, and they can testify. Once they learn this stuff 2, 3, 4, 5 times over and over again, it became a snap of a finger. Like, wow, why did I not know this stuff before? Or why did I not focus on the market like this before? So whole numbers, going back to the idea, or not the idea, the topic of key levels, right? How do we find key levels with gold? Again, whole numbers is one thing. Very specific numbers, or support and resistance, market structure. I need some water real quick. Whew. All right, so keep it simple at the end of the day. That's the one thing I want you guys to remember at the end of this call after we go through a few examples. So rejection candles. right? Rejection candlesticks. Let me write here out, rejection candle. So, rejection candle. A rejection candle shows you that price attempted to move in one direction, but it could not hold there. So, for a bullish setup, price may be trying to push lower, but it ends up closing back above maybe that level or that area. A wick can show you that sellers try to push down even more, but buyers stepped in. Basically, a rejection candle shows you that price attempted to move in one direction, whether that's up or down, but buyers stepped in and took control before the candlestick closed. Okay? So if we're saying for a bullish setup, that means sellers were once taking over, but buyers ended up stepping into the market. So we could be having an entry after this candlestick here. This would actually be called a bullish engulfing candlestick. If we're looking at this, this would be an engulfing candlestick right here. So we could actually be taking an entry after this candlestick because the market has now confirmed that buyers are now more in control. Easy target would be this high. Stop loss could be below the wick. Or if you need more breathing room, stop loss down here, which is pretty big. This could be our trade, or even trying to target a resistance to the left over here, which is pretty much like the same level. So up here could be another targeting point way up here, which could be a farther target for the day or the time being. So even just something like this could be just even a neutral target, a good entry, a good reason to enter here. We got the whole number. We got the market structure, right? Price made a higher high in this market structure. We have now pulled back to the previous area here, right? And we're testing that. We're testing that area. That lines up with the whole number. So notice some of this stuff that we're talking about in the essence of market structure is lining up with the whole numbers, right? Or at least around the whole numbers. So this would have been a good entry at that $4,100 level. You can see how we could have got entry here. Price would have pushed up. We could have had a stop loss below the low. These two trades would have made your entire week or your entire month, right? It's not about a lot of trades. It's about taking the right trades. If you take trades like this, let's say it's not about the next trade. It's about the next 20 trades. If you take 20 trades like this until the end of the year, you'll be better off than most traders who try to take 20 trades a week or 20 trades a month. Trust me. If you look for one trade a week with a framework like this, it could be one trade a week. We have 52 weeks in the year. So think about that. You take one trade like this a week, you have 52 trades in the year. You take 2 trades a week, you have multiply that, right? 104 trades. So it's not about more trades. It's about the quality, the reason, the structure behind those trades. It's about the next 20, 30 trades you take, right? You guys see me take a lot more trades than we actually need to, right? I do that to keep things active. I do that to give you guys the experience, right? And it's honestly because I have a lot of experience on the charts. But trades like this are very selective. You're letting the market come to you. You're not guessing. You're not trading emotional. Trades like this might come once a week, twice a week, some weeks more, some weeks less. And you got to think of the bigger picture. You got to think about from now till the end of the year, what do the next 20 to 30 trades that I take look like? What framework do they have? What reasoning do they have? Am I entering based off of feeling? Am I entering based off of, it looks like it's going to go up. I think it's going to go up, or it might do this, it might do that. Or are you entering based off of this, and that? Something like I'm showing you here today, right? Because the point is, you could have missed all this movement and you still could have caught this trade. Let's say you missed the first trade. Let's say you didn't even catch the first trade. You still could have caught the second trade, right? So that's where you have that framework there of a reason to take a trade. Make sure the next 20 trades you take, the next 30 trades you take until the end of the year. We got August, September, October, November, up until December. You're probably not going to trade a lot in December because it's Christmas month. You're going to be busy with your family most likely. It's that time of the year where everybody likes to slow down, right? The markets can be slow in December as well, most years. We had a great December actually the last year. December was amazing this year. Probably one of the best Decembers I've ever had in my trading career. There was actually a lot more volatility than there most Decembers, but think about it. August, September, October, November, up until December, right? So the next like 4 or 5 months, right? How many trades are you going to take per week? Add that up per month. What are those trades going to look like? That's why you need patience to let the market come to you at the end of the day. All right? So right there we have a good framework of selective setups. All right? Now, if you look at the market, it started consolidating up here, right? And we'll go over another thing. Let's go back to here. Let's go back to this area. And we can see there was a nice bullish trend there. So we went over this, right? Nice bullish trend there. All right. I want you guys to study this stuff. Okay. And again, right here, if you're inside the inner circle, community and you go to education, there are some posts like this that I put on just some basic stuff that you guys need to know. Most of you guys might know this stuff if you're, that's about crypto. Where is it? So here, this is the setup we're talking about right there. Now, we'll do the opposite of this one time real quick. We're going to do the opposite of this. Type in number 1 in the chat though, guys. Type in the chat for me, guys, if you guys are understanding everything we're going over right now. Type in the chat real quick for me if everything makes sense, all right? Let me know real quick if this makes sense. If you guys are understanding, type a number 1 in the chat, type an emoji, type whatever. Let me know so far if I'm making sense on everything, if we can all agree that this stuff is simple. Can we all agree that this is simple? Now, what is the hard part? I'm going to tell you the hard part. It's having patience, enough patience to wait for these types of setups. Because you want to go on the charts every day. You want to make money every day. You see you see this girl on social media, this guy on social media making money every day. And you want to make money every day in the markets. The hardest part is letting setups like this come to you. I think we can all agree this is simple stuff, right? Type a number 1 in the chat if this makes sense. Is this only for buys? No. This is not only for buys. You can also catch sells using these concepts. So let's go over it real quick. And we'll get into it. So if we look at the market, you can see we started consolidating here and we have a high, right? We have a low. So now what are we getting here? We're getting a different market structure forming, right? It's not that you got to be in every trade. You got to be in the right ones. I want you guys to think about the next 20 trades you take until the end of the year. Not like most traders who take 20 trades a week, 20 trades a day, 20 trades a month even. 20 trades until the end of the year. 30 trades until the end of the year. That could be 1 to 2 trades a week. It doesn't need to be a lot of trades. So if you look at the opposite of what we just went over. We went over this, right? Now, look at the market here. It obviously dropped, right? Kind of simple. We can see some framework here. We can see some market structure here. At the end of the day, we have a high. We have a lower low. We have a high here. We have a lower low. So where is the trade setup here? For some of you guys, it should be very, very, very obvious here, right? For a lot of you guys, I would say it should be very obvious, all right? So where's the trade setup here? So we have a clean chart here, actually. So we have market structure identified, right? Simple setup actually right here. Even I think this one's actually even way more simple than the first two we just went over, right? These are the types of setups I want you guys to understand that are quality over quantity. A profitable trader executes less because less is more. Less is more at the end of the day. When you let that less come to you, that setup that actually adds up to this, and that, you'll be able to execute more confidently. More confident, I'm going to be honest, more risk, right? If you have more confidence, you're going to put more risk on your trade. You're not going to be a bitch. You're not going to sour out. You're going to know what you're executing. And you're going to know, okay, I'm doing this once a week. I know what my risk is. Whether I'm risking $100 once a week, $500 once a week. A lot of people say to me, Evan, you can lose $1,000 a week in trading. Not necessarily. Not if you're risking only $100 a week, right? I have students who might risk $50 for the week, $100 for the week. I have a student, for example, I'll show you guys real quick. I have a student, for example, if we go to the results here, like I have students who will risk literally $100 a week. They'll risk maybe X amount. Like this student risked only $315 to make $5,000 in payouts. Now they're taking a 3-week vacation. So I get a lot of DMs and a lot of questions from people that are outside of this community that don't understand risk. The people that are not inside our community, even just in the public sessions, don't understand risk. You should see the amount of DMs I get from people who say, oh, like, you can lose $1,000 a week. Well, what if you're only risking $100 in a week? What if you're only risking $50 for the week? Then not necessarily. Take one of my students here who went from $100 to $500 in one trade. He wasn't risking $1,000. The most he could have lost was $100, right? He wasn't risking $1,000. He put $100 in his account. He withdrew $400. He took his profit, right? He knows what he's risking. At the end of the day, he knows what he's risking at the end of the day, right? Here we have a student who did, again, a small flip. He put $500 in his account, made $835 profit, withdrew $500 there. That's the person, that's the same student who just went on a 3-week vacation. He might not be on this call. He might be on his little, actually that's not a little vacation. That's a 3-week vacation. So that's a pretty good vacation, I would say, right? I don't even take 3-week vacations. Actually, well, I was just in Colombia for a month, so it was kind of like a work vacation though. I was with my friends, some family out there, realistically, so it was different. Here's the setup. So let's get back to this, right? Here you have the setup, right? What do you have? You have market structure here. So we have a high, right? We have a high here. We have a lower low. We have a lower high. We have a lower low. Now the market here looks like it was about to change, actually. Came up, got above this high, but still ended up creating a lower high. Because from there, what did we do? Oh man, I wrote lower high there. Here, I gotta fix this. Let me fix this. Give me a second. There we go. Where's the setup? Well, we can see at that previous lower low, the market is trading right into that, right? We're trading into that previous lower low here, right? So what do we have? Market structure, break and retest. Break and retest is one of my bread and butters. I've been using break and retest since 2018, guys. 2018. Some of you guys didn't even know what a pip was, all right? So the retest. I want to teach you guys something key about the retest. So the break and retest is the bread and butter. One of the bread and butters when it comes to gold trading, okay? It's kind of like this, right? It's simple, it's repeatable, and it gives me a clear space where to enter. A clear space also where to put my stop loss, okay? So at the end of the day, price comes to the area. That level rejects, right? We break out that area, it comes back to it, right? Most traders, they usually get caught in chasing the breakout. I don't need to chase the breakout. I need to wait for the retest, okay? A previous level of support or resistance that the market can come to. The retest, remember what I said in the first examples, is where I start paying attention, okay? So, you do not have to enter on every single retest, all right? Not every retest is going to hold. Your job is to see, will the sellers stay in control or will the buyers stay in control? Okay? What can help us enter the retest? Rejection candle. Remember what I said. A rejection candle shows that price attempted to move in one direction, but it could not hold there. So what are we going to get here? We're going to get a little rejection candle. Why do I know this? Because I took this trade live with you guys. Actually, we took this trade live. And some of you guys might remember this trade, to be honest. Some of you guys might remember this trade, okay? We took this trade live. What do you got here? So you don't have to enter right when the market hits a zone. You can wait for the rejection candlestick, because the rejection candlestick shows you price attempted to move in one direction, but it could not hold there. For bullish setups, for bullish trade setups, it shows you that price tried to push below, but it closed above. For bearish setups, it shows you price tried to push above the level, but closed back below it. What do we have here? We have a psychological level. Here we have a whole number. So here we have a whole number, which is going to be, again, gold respects zeros. I'm going to say this again. Zeros, 25s, 50s, 75s. Okay? What do you got there? You got your whole number, psychological level. You got a rejection candlestick. This is where we could have been entering the market, is right here. Target could have been at the low right there. This would have been a good trade. This would have been a fine dandy trade setup to be taking. I took this trade live, actually. I took this trade live. What was it? Let me go to Classroom real quick. Inner Circle Uncut. This would have been trade breakdown from day 10 out of 60. No. Day 4 out of 60 gold sells. So if you actually go to YouTube, I want you guys to do some homework tonight. I got one lesson for you guys to do tonight. One homework session, okay? If you can't do this, then I don't know if I believe in you. I believe in most of you guys because you showed up today, right? Most people didn't show up that were here yesterday. If you notice, we had a lot more people on yesterday than that came today. So I believe in everyone that's here. But I'll believe in you guys more if you guys could go back to day number 4 of 60 on the live streams, okay? Because I actually took this trade live. I broke, there it is actually. There it is right there. Let's click on it right here. Day number 4 of 60, 3 weeks ago. I took this trade live. I broke this trade live. So I want you guys to understand something right now. The things that I teach you guys are built on real experience, real education, real trades. I'm not just going to go back and tell you guys, oh, you could have took this trade. Oh, you could have done this. Oh, yeah, the market would have worked like this. Perfect trade. No, I'm teaching you guys stuff I did with a lot of you guys in real time. So tonight's homework, I want you guys to do this, right? If you guys can do this, whether you decide to whether you guys decide to go forward and whatever, jump on the sessions, whether this is your last session with me and you never watch a session of me again, I don't care. I want you guys to go back to Road to Consistency, day 4 of 60, and I want you guys to watch that trade breakdown, because I took that trade live with you guys. If you guys could do that for me, all right? If you guys could do that for me, that'll help you. I'm only asking you to do it because I want to see you do better. I want you guys to level up. I want your experience to grow. This isn't for me. I'm not asking you guys to go do it for my benefit. I'm asking you to do it for your benefit at the end of the day. We took this trade actually live on a stream. You can actually kind of see the break and retest. Let's see. We got it like right there. See? If you actually look at my chart, right? There it kind of is. There I'm taking the trade actually live on the stream. Right there. Simple. Not a lot, right? And it's funny, my reaction was actually funny at one point. If you go watch my reaction on that session, we had students. I remember we had someone who made $6,800 on that stream. We had a bunch of people who made $1,400 on that stream. Like, the money that was made on that stream was actually insane. Like, it was a crazy trade. I think that was one of my favorite trades we took in the last month. It was pretty insane. Take profit was hit. You can actually see I'm in the entry right there. It hits my take profit. I only made like $1,500 on that trade, right? I didn't make a lot of money on that trade. I made $1,500. There was people who made more money than I made on that exact trade. So that's what I'm breaking down right here with the step-by-step process, right? Rejection candlestick right here. This will be a bearish rejection candlestick, right? I want you guys, that's the only thing I ask you guys to do today. You can do it tomorrow, but the faster you do it, the more it will be refined. I want you guys to understand something about knowledge, right? The first time you learn it, you don't grasp it more than you do the second time. But the people who learn something and then study it a week later, they don't refine things as fast as someone who might do it 30 minutes later, an hour later, or within the same day. So the key word at the end of the day is confirmation today. We're not trying to predict the exact top, the exact bottom. We're allowing the market to reveal its hand, all right? I would rather enter slightly later with confirmation than enter early because I'm scared of missing the move. Missing a trade costs you nothing. Forcing a trade, entering early, entering out of FOMO costs you money. That is a major shift in your mindset. So write that down. Missing a trade costs you nothing, okay? Forcing a trade costs you actual money, right? If you're going to be entering, like I said, I would rather enter a trade slightly a bit later with confirmation than enter early because I am scared of missing the move, okay? So where does the stop loss go in a place like this? Above the candle. If you guys go study that session, you'll hear me talk about it. That's your only homework for today, guys, is to go watch that session, go study that session, all right? And you're going to understand a lot more about everything that we even talked about today on this session. So remember, the full process is simple. First, identify market structure, right? First, identify market structure. Second, wait for a level, wait for a break and retest, wait for a break in the trend, wait for that retest to happen. Look for a confirmation through rejection. That could even be a liquidity grab, which we'll go over on the next session that I do in London session. I didn't have time today to go over liquidity grabs. That's something else we could talk about on the topic of confirmation, all right? So you're not buying on this candle. You're looking for sells on this candle, okay? Boom. Simple. Just like that, you're building a case. So market structure, key level. That could be with the whole number, support and resistance, break and retest. You're waiting for that retest. Next, you're looking for that rejection candlestick. You're building a case. You're not guessing. All right. So before we finish today, guys, all right, before we finish today's call, I want you to take a second to realize maybe how much your perspective should have changed over the last 2 days. Yesterday, we talked about why traders lose. Today, I showed you guys how to actually read the market. Before this session, some of you guys might have looked at a gold chart and just saw candles moving up and down. Noise, random movement, confusion. But now you should be able to look at chart and see structure, higher highs, higher lows, lower highs, lower lows. You should be able to understand something about key levels, breaks, retest, rejection candlesticks, okay? The last thing I wanted to go over was liquidity grabs, but we don't have enough time for that. We're going to wrap this session up in a few minutes. I'm going to answer some questions in the chat. But what you are learning today is, remember, a story. Remember what I said. It all starts with market structure, which is a story. You're trying to build that story. You're trying to understand that story. And that's the first major step behind every single movement in the market is the story or the market structure. Because once you can actually see structure, you can use it to avoid the noise you used to see. You stop guessing. You stop chasing every single candle at the end of the day. You stop feeling like the market is completely random. But understanding theory, guys, is only one part of everything. Tomorrow, day number 3 is where everything comes together, okay? Day number 3, we're going to be doing this stuff live, looking for trades live. You're going to watch me apply everything we covered today in real time with real money on the line. So you're going to see how I analyze gold in real time while the market is moving. I'm going to be marking my levels in real time. I'm going to be waiting for a setup. I'm going to be seeing if there's something we can enter. I'm going to be talking about how I manage risk, everything more in real time. And I would say most importantly, you're going to see some patience behind the trades, because looking at a trade afterwards is really, really easy. Like going to the chart, back testing, looking at a trade afterwards, going back a month ago, going back 3 weeks ago, that's pretty easy after something happened. Anybody can circle a trade, can circle an entry after the move already happened. So tomorrow, you're going to be seeing decision making in real time. No hindsight, no replay mode, no edited screenshots like 90% of people do on Instagram nowadays. Everything you see on Instagram, someone like me who's been trading for 11 years can tell. You're not going to be seeing these perfect things you see on Instagram that everybody's doing nowadays with the replay mode, the edited screenshots. No pretending like every setup was obvious. Real analysis, real decisions, real money on the line tomorrow. And make sure you stay until the end tomorrow, because after the live trading session, I'm going to do something. I'm going to open up something for the people who are actually serious about going all the way. The people who don't just want another strategy to watch and forget. Like, I mean, the people who are actually fucking serious about going all the way and dedicating to this. I'm not talking to the people who just want to learn another strategy, watch it once, and forget about it. I mean the people who want to show up every single day, the people who want the full structure, the accountability, the guidance, the environment to actually become consistent with this fucking shit. So tomorrow, I will explain everything. So for now, just make sure you are there tomorrow, all right? On day number 3, because we have a lot more stuff that I need to cover and that we need to go over tomorrow. So before everyone leaves, I have, before you guys leave today, I want to answer some questions. I want to give you maybe a little bit of mindset for today's session, all right? Remember, tomorrow, same place, same time, guys. Don't be late. Do not tell yourself you're going to catch the replay later. Remember, these sessions are not posted on my YouTube. Tomorrow is the final day, and I'm going to be giving some of you guys, when I say some, I mean the ones that are actually fucking ready to take the next step and get to the next level and actually apply themselves in a real environment, a place that will actually change their trading with consistency. At the end of tomorrow's call, I am opening up the next steps for the people who are actually ready to take this seriously. Today, you learned how to see the market. Tomorrow, you guys are going to watch me trade, all right? I'll answer a few questions. Make sure you guys catch the next London session live stream, all right? So, today's homework. Like I said, today's homework for you guys is watch day 4 of 60 on Road to Consistency. That session is going to show you a lot in real time, okay? All right, that is the session I want you guys to go watch. It's on my YouTube channel, all right? You guys can catch it again. It was 3 weeks ago. You can see we had 780 views on that session. Fire trade we caught in that session. If you guys want even more context for free, look at what I've been doing. The last month, I've been live trading, taking trades live. Even today, if you look at today's market, we had something we could even round out today. If you look at actually gold today, I had this sell last night on gold. It ended up coming down and then didn't get to my full take profit. My full take profit was at 4,040. Didn't get there, but look at what gold actually did today. When we look at the chart, we have a resistance here that the market formed, right? What did we do? You can actually see how we broke above that resistance level, right? And that resistance level is right around 4,075. What do you know, actually? It's around 4,075, 4,070 area, which is a psychological area. So you have like resistance here that you can see on gold, right? You have a good amount of resistance there, right? Nice area, nice. What did we do today? We broke above that resistance. So if you were active for New York session, you actually could have caught buys right around 4,075 here after we broke above that resistance. Nice move up. Stop loss could have been here at the low. We broke above. So if you look here, we have an area of resistance on gold. We broke above it. Retest. Continuation. Break and retest. There's a market structure here as well. All right. What is the best time? So best time to trade gold is not, there's no best time. Gold, you have to understand gold. So one thing you got to understand about gold is that if we're going to talk about gold, it's the #1 asset in the world. So in terms of like how it's traded, when it's traded, where it's traded globally, it's traded worldwide. So gold is the #1 ranked asset in the world. Okay? $28 trillion market cap. Gold's not just going to move one time a day. It's not just going to move in New York session. Gold will make movements in London session. Okay? And yes, it will move in New York session and Tokyo session. So around all major sessions is when gold moves. I saw someone ask that in the chat. There's not, so to rephrase your question, there's not a best time to trade gold. I wouldn't say, because you could ask that question to 10 different people. One person, most people will tell you New York session, by the way. Most people will say New York session is the best time to trade, but New York session is very fast. It can be wiki. Maybe Tokyo session is your best time. You could ask that question to 10 different people. You'll get 10 different answers. I would say gold is very versatile. It can move in London. It can move in Tokyo. It can move in New York. So all around the day, it can have setups or movement at different times. There's not just one best time to trade gold at the end of the day. All right? Tomorrow, same time, 2 p.m. Eastern time. I hope you guys enjoyed this session. All right? All right. And Evan changed my life. Good to hear. I gotta refresh this. There's too much. We got too much in the chat, yo. Are there different rejection candlesticks? So let's go candlestick patterns. So right here. So here, there is. The characteristic, the way they can look, right, can be different. You could have engulfing patterns. You could have consolidation patterns. My favorite would be the ones with small bodies, long wicks, like a hammer candlestick or an inverted hammer, a hangman, shooting star. So yeah, there are different types of rejection candlestick patterns, I would say. I think I actually put, let me see, did I put it in yet? Maybe I didn't upload it yet. No, I didn't upload it yet. No, okay, I only put the patterns on it. I didn't put the candles on yet. I have to upload that into the inner circle. So no, I didn't put that one yet. No. Oh, that's like the other setup. No, so I didn't put that one yet. But yeah, there are different types of candlestick patterns. I would say, like if you go on Google, for instance, you type in candlestick patterns or candlestick rejection, they can look like this. So there's different ones, and you just have to train your eye to seeing them, right? And I'm gonna say one thing. There's a difference between seeing like a candlestick after and in the moment. For example, if you look at this, if we go here, so look at this. See how this candle is looking right there? See how this candle is looking right there? It's green, right? Notice how it has a long wick at the top, right? Notice how it's a long wick here and the body's small. This candle is getting ready to reject because it ended up actually turning into this. So it ended up actually turning into a candle that looked like this. So there's a difference at times, like when you're on the chart and you're watching a candlestick in the moment and you're watching it fluctuate and what it can actually turn into. Okay? Today was a great day. I hope you guys enjoyed today's session, right? Day 4 of 60. Yep. Go watch day 4 of 60. So if you go on here. Day 4 of 60, road to consistency. I would say that's your homework. Go analyze that setup. Go watch the setup. Go watch how we do things. If you're new here, especially, go look at what we did on this session. There was someone who made $6,800 on that session. A bunch of people made $1,400. Someone brought brand new tires for their car on that session. Literally, because of that session, someone was able to buy brand new tires for their car. It was a great session. So I hope you guys enjoyed today's session. All right. Day 4 of 60. All right. The chat, we have too much things in the chat that the questions are not popping up yet. I think there's too much. There we go. I had to refresh it. Yeah, there's way too much going on in the chat right now. All right. What time frame do I focus on? Well, we start from the top down. It's good to start from 4 hour and then work your way down. Depending on the session. So depending on the session, I might look at the 30-minute, 1 hour, 4 hour, mainly 30-minute, 1 hour, 4 hour. Those are like my 3 major time frames that I like to look at for rejection candles. Market structure. Market structure, you're going to see clearly on a 4 hour or even a 1 hour chart, right? Mainly like a 4 hour, like you could see a clear market structure on. I like 30-minute, 1 hour, 4 hour the most. I also look at the 2 hour. So if you notice here on TradingView, you can add custom intervals. So you can create an interval. 2 hour is, it already exists, but favorite candlestick pattern would probably be the, like I said, I think I answered that, or I said it in the answer, would be like a shooting star or a hammer candlestick. There's different types of rejections that you have to get used to seeing and train your eye to see, okay? So there's like cheat sheets like this, for example, like a hammer appears at the bottom of a trend, inverted hammer, morning star, right? 3 black crows. I don't like that personally. Like that's not really something like, you have your doji. So you have different ones. You have all sorts. Like it's not just one specific candlestick pattern we look at. So understand rejection, candlestick patterns. There's different kinds. How do I know it's the right rejection candlestick? I would say it's just from seeing them over and over again, right? Like studying, seeing them in real time. Remember what I said, I have a lot of hours on the chart. So it's even seeing the candlesticks in real time as they fluctuate. Like what is a rejection candlestick simply? Like let's go to this chart. And a rejection candlestick can happen on any time frame. It's just like here you could see at $4,100. So if we go $4,100 psychological level, $4,100, that's going to be a whole number, right? Right there. At 4,100, if we look at the 15-minute, you can see a bearish rejection on the 15. If you look at that, you can see there was a long wick above it here. If we go 30-minute, look at the 30-minute. What do you see on the 30-minute? On the 30-minute, we're getting more of like a shooting star, which would be, do we have it here? It doesn't show a shooting star in this one. So let's go back over here. Like a shooting star right there. Look at, so if we look at 4,100 there, if we look at different time frames, like if we go 1 hour, there's just a long wick. If I go to the 30-minute, I can see this small body candle with a long wick. That's like a hammer, right? If I invert the chart, that's basically like a hammer candlestick right there, right? Invert the chart. So on the 30-minute, it shows me a hammer here, or this will be called a shooting star. If I go in the 15-minute, it looks a bit different, right? But there's rejection happening at that level, just like here, 4,075. So if I look at 4,075, I could see not that long ago on a 15-minute chart, there was rejection at 4,075. That's again going to be another whole number. These are the types of practical things that we focus on a daily basis. And guys, after day number 3, guys, after tomorrow's call, I just want to say we're going to be rolling. We're going to be streaming a lot until the end of the year, all the way until December. I've been streaming a lot on YouTube Public, but after tomorrow's call, it's going to be rolling. We're going to be going over a lot of things. I'm super active. I'm back home. I'm not in Colombia anymore. I was just on kind of like a 30-day vacation. So we're going to be rolling. We're going to be super, 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 super active over the next 3 to 4 months, guys. So we're going to get a lot of these experiences, right? If you look here, you have a resistance. You broke, retested it right there. So the setup I went over can be seen on different time frames, but that's not the only setup we focus on. You can also trade reversals when it comes to whole numbers. There's the break and retest that I went over, but there's also reversals. So make sure you guys are on until the end tomorrow. I'm going to wrap this up. Thank you guys for coming on. The replay will be available in the WhatsApp group for a short period of time. So make sure you guys check out the replay if you guys want to refine things and go back. It's not going to be posted on YouTube. I'm going to wrap this up for the day. I will see everybody tomorrow, 2 p.m. Eastern time, same time tomorrow. All right? Peace, peace, peace. I hope you guys enjoy the rest of your